While the word recession might sound scary to most people, smart people like you know that recessions create huge opportunities, and the 2023 recession is potentially going to be a once-in-a-lifetime opportunity for you to build generational wealth. History has shown us that during economic downturns, fortunes are made, and this time, there's no exception. Hey there, financial enthusiasts and future wealth creators. Welcome back to our channel, where we dive deep into the world of money, investments, and uncover lucrative opportunities. Today, we have an absolutely game-changing topic that's going to turn the tables on the 2023 recession, and we're going to talk about how you can take advantage of the upcoming recession, and I will also show you real-life examples of how much money you can actually earn. Get ready, because in this video, we'll show you how to leverage this economic downturn to unlock unprecedented wealth. Now, before we jump right into it, don't forget to hit that subscribe button and ring the notification bell so you never miss out on any of our money-making strategies. Now, what is a recession? For most people, a recession is like a stealthy predator lurking in the shadows, ready to pounce on unsuspecting economies. It's a sinister force that brings financial doom, affecting everything from your job to your investments. Generally, in a recession, we can see a significant rise in unemployment, a drop in wages, loss in consumer spending, and a loss in value in everything, from stocks, food, energy, real estate, which almost every time affects the whole world. The last recession we had was the financial crisis of 2008, which for almost everybody was financially detrimental. However, there are those selected few who knew how to maximize the crisis and take profit in everybody else's downfall. Now, let's start with the most important piece of the puzzle when talking about recessions: stocks. As of now, all major indexes are down between 20 and 40%, with many respected sources saying it will fall drastically more. During recessions, stock markets often experience bearish trends, characterized by an extended period of falling prices. As economic conditions deteriorate, investor sentiment weakens, leading to widespread selling pressure. This downward momentum can persist for months or even years. But when do we know when it will hit rock bottom and we can jump in and invest our earnings to maximize profit? Generally, the absolute bottom occurs when we see capitulations across investors. This is the time the stock market will begin its upturn and bounce back. This period is usually called the bear market, and not to put this too lightly, but this recessions can actually be a good thing and can probably be a defining period of your financial life. What you do over the next couple of years will greatly impact your future net worth and financial status for the rest of your life. Now, I'll cover exactly how much money you can make from this in just a couple of minutes, but first let's talk about why recessions can actually be a good thing. Now, the markets usually tend to grow, then crack, grow, crack, grow. You get the idea. The important part is the markets historically tend to grow more than they cracked over time. Moreover, a recession or a crack in the market typically only last about 2 to 3 years, while the growth period lasts on average 15 years. This is a very important cycle to understand because it tells us that even though we are currently on our way down, this won't last forever. And you can probably expect that the next 15 years of investing will be money-making time. You can look at a recession as a reset button for the economy, where prices fall in every area, such as employees, commodities, and basically all assets, which creates this goldmine of buying opportunities. In other words, during a recession, you can get your hands on real estates, stocks, crypto, and any assets you can imagine at a heavily discounted price. Now, I know this is hugely oversimplifying things, however, it is not far from the truth, and I will show you this with a simple example. Now, if you are young and don't have $500,000 to invest, or a company with employees, don't worry. I'll show you an example of how much you can realistically earn within those 15 years after a recession, taking the slowest and safest possible route. Since you're watching a YouTube video on how to make money, I know you're probably screaming at your laptop or phone, "I don't want a slow route, show me how to make $1 million today." But bear with me, this is just an example to show you how easy it can actually be. Imagine this: The average salary in the US is about $6,228 per month. For the sake of this video, let's say the average is $5,000. And historically, the S&P 500 goes up roughly 59% the 2 years following a recession and 12% average return after that. Now, if you manage to save only about 20% of your income, which is $1,000, and invest those 20% into the S&P 500, you would after 2 years have $38,160. Keep investing, and in 15 years' time, you will have $733,375. Now, that might not seem like much after spending 15 years, but take into account that it's fully possible to save 40%. That number would be much higher at over $1.3 million. To maximize your profits and navigate the recession period, there are several strategies you can implement. Let's explore them in a different order. Firstly, diversifying your investment portfolio is crucial. If a 20% drop in the market would induce panic, it indicates that your investments may be overly concentrated. For instance, if your entire portfolio is invested in US tech stocks, it would be wise to consider adding large cap and international stocks to the mix. Additionally, exploring real estate investments or investing in real estate investment trusts, REITs, can provide stability, as rental incomes tend to be more reliable. The more varied your portfolio is, the less likely it is to collapse if a particular sector experiences a setback. Secondly, it is advisable to protect your career. Your career serves as the best safeguard against financial downturns. It's not only about the market going down, it's also about the market declining, while you simultaneously lose your job, which would force you to sell your investments at a low point before they have a chance to recover. Therefore, now is the time to invest in self-improvement, acquire new skills, and double down on your current professional endeavors. Next, consider holding on to some cash. Although investing your money as soon as possible may yield better statistical results, maintaining a reserve of liquid funds provides peace of mind. Personally, I allocate about 10% of my portfolio to cash throughout the year. This approach has allowed me to seize attractive opportunities and provides a safety net for unexpected situations. Having cash on hand ensures you have something to fall back on, regardless of what unfolds. Additionally, it is crucial to invest for the long term. A profitable strategy is to continue with your regular investment activities as if nothing extraordinary is happening. Historical data supports the effectiveness of dollar-cost averaging, which involves consistently buying into the market. Therefore, stay in the market and continue investing at regular intervals, as this approach has proven to be rewarding over time. One effective strategy to capitalize on market opportunities is to act swiftly and decisively before anyone else. By taking proactive measures and being one step ahead of the competition, you can position yourself for maximum advantage. The key to acting before anyone else is to stay well-informed and closely monitor market trends. Keep a keen eye on relevant news, economic indicators, and industry developments that could potentially impact the market. By staying ahead of the curve, you can identify emerging opportunities and take action early on. In other words, don't miss out on the next Bitcoin. At least try, because yes, it'll happen. When you spot a promising investment prospect, it is crucial to conduct thorough research and analysis. Evaluate the potential risks and rewards associated with the opportunity and assess its alignment with your investment goals. Once you have a solid understanding of the opportunity, make a well-informed decision and execute your investment strategy promptly. Lastly, scale back your expenses. I mean, come on, do you need the $8 coffee every day? By closely tracking your market activities, cutting unnecessary spending, and operating frugally, you can reduce your financial burden. Simultaneously, reinvest as much as possible back into the market. It's important to create a plan for potential income drops of 20 to 50%, considering how you would bridge the gap and taking preemptive measures to protect yourself from such circumstances. It's definitely not going to be easy, but if you implement these strategies, you can optimize your profitability and ensure you make a lot of money both during and after the 2023 to 2025 recession. So, with that being said, thank you so much for watching, guys. If you found this video insightful, please give it a thumbs up and consider subscribing to our channel for more valuable content. Also, there's a link in the bio and in the comments, which I highly recommend you check out for yourself. And make sure to watch the next video, where we'll be talking about the best way you can invest your money in 2023. Thanks for watching, and I'll see you guys next time.